So if you miss the top 3 days of a year, you might lose 80% of your return. If you miss the top 6 days, you lose it all. This crash is going to cause a lot of clarity to form there. First, the community is getting educated, right? I bet you everybody in the crypto community today knows the difference between a dollar in the bank and UST. Mm-hmm. And I bet you they have an intelligent conversation about the difference between Circle and UST and the business model of the two. And mm-hmm. we saw last week, Tether had to redeem billions and billions of dollars of Tether. And they could, right? Mm-hmm. So they could. But if you'd actually tried to redeem $7 billion of UST in a couple of days, well, people tried to do that and they couldn't. So I think the industry got educated, but also I think that there's a lot of people that would like to issue stable coins, like Caitlin Long's bank would like to issue stable coins. And if you look at the banks like Silvergate and Signature, they're FDIC insured banks, but they can't issue stable coins. So, and if you look at JP Morgan and Goldman Sachs and Citigroup, they can't issue stable coin. It's clear that Luna was a crypto security. The reason it's a security is there's an issuer and there's someone that can make decisions. And if I can actually make decisions, if I can take $3 billion and buy Bitcoin, and then I can take the same Bitcoin and sell it, on behalf of the people that own the Luna token or on behalf of the people that own the UST token, I'm acting, kind of like a public company officer, and if you're a public company, like think about MicroStrategy. Like if I just sold all of MicroStrategy's Bitcoin and I didn't tell you, right? Or if I bought twice as much and I didn't tell you, I would be changing the nature of the security. I have, kind of an obligation to disclose that, an ethical obligation as well as a legal obligation to disclose what I'm doing when I can actually impact the value of the securities held by the public. If you look at statistical analysis of Bitcoin or the S&P, I think the conclusion generally is that like 80% of your returns come in like 1% of the days.
Yeah.
So if you miss the top 3 days of a year, you might lose 80% of your return. If you miss the top 6 days, you lose it all.
Yeah.
So the way this is going to work is it's going to look like you're not making a lot of money 98% of the time. And then you're going to wake up one day and you're going to find out that the sovereign wealth fund of some Middle Eastern country just bought $10 billion of Bitcoin. It's going to double, or it's going to triple. And then you're going to be kicking yourself and screaming, saying, oh, well, I could have bought it at blank and I didn't buy it at blank. And you'll be angry. I think that the trading mentality is just really an awful mentality for anyone that, if you're not running proprietary algorithms on high-speed computers. Like I get it if you're a high-speed computer trader and you're like slicing a tenth of a penny 1 billion times an hour. Like I get that kind of trading, but for 98% of the population, people don't have any proprietary edge to trade. And so generally they all get beat by the market trading. If you look at the numbers since we actually made our Bitcoin purchase, the money supply expanded 36%. The M2 money supply expanded 36% in the US. Gold is up 7%. Gold didn't track the money supply. If we had bought gold, we would be way lagging behind the money supply. The NASDAQ index is up 19%. It barely crawled forward, but it didn't actually keep up with inflation. The S&P is up 29%. So if you bought pretty much all of the desirable companies in the index, it didn't actually hedge your inflation. It lagged inflation. And why? Because you're owning securities and the corporate management teams have inefficiencies. They're basically an overhead cost. Bitcoin's up 229% since then. For example, like maybe you hate Bitcoin. If MicroStrategy has a strategy, which is we're long Bitcoin, we're levered long Bitcoin, well, then that's good, right? Because now you can short us. It's not a bad thing for people to short your stock, because if they short your stock, eventually they're going to have to cover right there. On the other hand, maybe they like Bitcoin, but they think it's 99% likely to fail. Think about it. You have $100 million. So you put 1% of your portfolio in it, and you want to find someone that actually is pure long Bitcoin, you see? So if we're transparent and predictable, then we allow a rational investor to allocate their portfolio rationally. And they just don't want us to be unpredictable. What happens if we become unpredictable? You see, like, if I'm predictable, you might meet with me, understand what I'm going to do, and say, I wanted to put 5% of my portfolio into Bitcoin, and you might actually invest $5 million after a 1-hour meeting, right? But if you met with me and I said, I'm a genius and I can trade everything and I know when to sell and I know when to buy and I'm going to time the market and I have all these algorithms, you're like, well, maybe you do, maybe you don't, but 95% of the time, those things don't work. So you get where I'm coming at. The world wants certainty. It wants clarity. It wants conviction, and it wants you to execute with focus. So it happens that we believe in Bitcoin. But there are plenty of people that trade our stock. You could buy our stock and go long our stock and short Bitcoin, you see? There are people that may actually invest in us that don't have our degree of conviction, but they respect our clarity, they respect the transparency, and they respect the fact that we're predictable. And it's very important in this world, of chaos, that you actually stand for something. I think that when you're looking at modeling this, you have to be aware of time frames. For example, a lot of people, they want to read a headline and then they want the price of the asset to move the way they want it to move immediately or the very next day. But in fact, there are very long time delays in these things, 6 months, a year, 2 years, 3 years. So I think that as I pointed out, if you look at the 2-year, the 4-year, the 6-year time frame, Bitcoin is acting very rationally per inflation. But if you look at very short time frames like 6 weeks, you may sometimes get the opposite of the expected effect in the near term, because you've got other drivers. You have traders that have large pools of capital that are trading with a different model that are dominating the market in the near term. I just think you got to think more fundamentally about these things. Not too many people are thinking about the fundamentals, at least in the near term. I joked on Twitter, people with less knowledge and more money than you set the price in the market. Over time, they will get the knowledge, you will get the money. I think there's a lot of randomness there, but the truth is I don't have any particular opinions that I'd like to share about the near-term price patterns. I'm not a trader. What I think is eventually one day you'll wake up and some country will buy $20 billion of Bitcoin and it'll jump by a factor of 3. And that'll be the thing that's going to drive the price long-term is going to be intelligent regulation. As the SEC, the FDIC, Treasury, as FASB, as they issue guidelines, as big institutional investors and big banks get into the space, as countries get into space, I think that'll drive the price up. And I think in the near term, trying to guess what the price is going to be is a losing proposition. So I just don't think it's a good idea to even try.